We look at it as overbought at the moment, but it is still underinvested, basically. So I think so nothing has changed for me. For the last $2,000 per ounce, we've been bullish, and everything that took us here is still quite bullish. When we're looking at client portfolios on the wealth management side at Mel's, for instance, the highest we've ever had in terms of gold allocation is about 1.1%. Right now, we are 0.5%. So you still actually have space to increase. One point I would make, though, ETF inflows last month were up 880% year over year, and that is ultimately a concern. I think you can't compound growth at 880% forever, so at some stage you run into an air pocket then and end up in a situation where gold might not rally. But I think from a pure fundamental macro backdrop, we're still looking good.
So you buy dips?
I would. Potentially, yes. I think.
What is a dip at this point? What is a dip that kind of would be worth buying?
Look, you have got weekly price movements of $100, $200 per ounce. I think if you go down that much, that potentially is a dip.
Okay, so there are entry points. Do you see more volatility? Do you see that potential coming?
Yeah, I think the volatility we're seeing picking up actually.
Right, so the entry points are coming.
The entry points are coming. Yeah.
Is this a speculative? The debasement trade, it has this kind of fundamental kind of theoretical underpinning to it about kind of what's happening with fiat currencies and debt and all that kind of stuff. There's another argument that says that gold's just a speculative asset.
Look, it is an asset, I think, and it has a role to play in portfolios. For instance. So take an average central bank portfolio. The best portfolio you have, or the highest risk return profile, best risk return profile you have, if central banks hold 30% of their assets in gold. Right now, they hold between 10 and 15%. So from a diversification perspective, it actually has a role to play. But I agree with you. In the real economy, it doesn't really perform anything. But you still get some kind of price exposure when you have got in your portfolio, right?